Welcome to a new deep dive. Today, we're really getting into a fascinating story of corporate change. Reliance Industries Ltd. Our mission really is to figure out how this Indian giant, in just 10 years, reinvented itself. From oil and chemicals to this huge conglomerate covering digital retail, even new energy. We've got the financials, strategic reports, all of it.
What's really striking isn't just the scale, the sheer growth, but how deliberate it was, the strategic pivot. It's a classic case study of de-risking and unlocking massive growth by diversifying away from just the core business.
Okay, let's unpack this then. The early 2000s,
Yeah.
there was that big family split, right?
Yeah.
Mukesh Ambani kept the sort of traditional businesses,
Yeah.
while Anil Ambani took what looked like the future stuff, telecom, for instance.
Yeah.
And here's the twist. Anil actually shot past Mukesh in wealth initially. Became the world's sixth richest in 2008, wasn't it?
That's right. But wow, the next 17 years saw a complete reversal, a stark one. Anil's empire, it crumbled under debt, couldn't compete. Mukesh, on the other hand, his net worth just exploded, $117.3 billion. And that was fundamentally driven by those big bets on retail and digital.
Right, that huge move into Indian telecom in 2016 with Jio. That was audacious, to say the least.
Yeah.
Very disruptive.
Oh, absolutely. Disruptive is the word.
While it completely reshaped the market, what were some of the big risks, the challenges they faced with such a bold strategy?
Well, when Jio launched those free data offers, a lot of people, competitors, even analysts, thought this can't last. They thought it was totally unsustainable. What they maybe missed was the long-term play, building this massive digital ecosystem. By getting that digital connectivity dominance so quickly, Reliance built this really powerful platform effect.
The network effect. More users equals more value for everyone.
Exactly. More Jio users meant more data being used, which then feeds demand for their retail, their other digital stuff. And that, in turn, pulls in more users and, critically, massive investments. Think Meta, Google, they all wanted a piece.
Okay, so beyond the family story and the market disruption with Jio, what do the numbers actually say? How's RIL's financial health looked over this past decade?
The growth is, remarkable. Consolidated sales pretty much doubled. Went from around 433,500 crores, that's roughly $50 billion back in 2014, to almost 900,000 crores in 2024. And maybe even more impressive, operating profit grew almost 5 times, from about 35,000 crores to 162,500 crores. That shows incredible gains in efficiency.
That kind of growth is just staggering, but expanding so aggressively, especially into something capital-heavy like telecom, that must have meant huge capital expenditure, right? Massive CapEx. How did they fund all that without getting buried in debt?
Oh, absolutely. You see it in the cash flow. Investing activities consistently negative, meaning they were spending heavily on those long-term assets. Aggressive CapEx. But, and this is crucial, they followed it up with a very conscious strategy to deleverage, to pay down debt. Look at their debt-to-equity ratio. It dropped significantly from maybe 0.7 or 0.8 down to 0.3, 0.4 by fiscal 24.
Okay.
That basically means they nearly have their reliance on debt for every dollar of equity, so a much stronger financial structure.
Less risky.
Right, much more robust. And what about dividends? They seem consistently low.
Yeah, that's another strategic point. The payout is consistently low, usually around 9 to 12% of profits. It clearly signals that RIL prefers to plow that money back into the business, reinvesting in growth in these big capital projects, rather than giving more back to shareholders right now, is very much a choice to fuel future expansion. Interesting. And it's not just the core financials or digital, is it? Reliance makes these other moves, things that might seem a bit tangential, like their involvement in sports. Owning the Mumbai Indians IPL team, that's another piece of this puzzle, right?
Indeed. They bought the team back in 2008. It was the most expensive one then, $111.9 million. Now it's valued around $119 million, and they've won 5 IPL titles, so successful on the field too. But this isn't just a hobby. It's actually a pretty shrewd play in the huge Indian consumer market. It builds brand equity, taps into that national passion for cricket, extends their whole ecosystem. You create loyalty that might then spill over into their Jio or retail customers.
So it's large-scale marketing almost.
And managed, by Nita and Mukesh Ambani with that same professional approach you see elsewhere in RIL.
What an absolutely incredible decade of transformation for Reliance. Just amazing. From that traditional oil and chemicals base to being this dominant force in India's digital world, retail, and all underpinned by some pretty smart financial moves.
Right. And this, I think, leads to a really important question for you, the listener, to think about. How does a giant conglomerate like RIL keep doing this? How do they keep identifying these huge macro trends, capitalizing on them to maintain this kind of aggressive growth and market leadership, and all while managing that tricky balance between massive investment and keeping shareholders, well, reasonably happy?
Definitely something to mull over.
Ah,
You know how these huge players really shape an entire economy. Thanks for diving deep with us today.